Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, on July 31st, 2025, we are breaking down the absolute fireworks surrounding Microsoft, ticker symbol Microsoft. The buzz around Microsoft's recent performance is deafening, and for good reason. The company just announced its fourth quarter fiscal year 2025 earnings, and the results have been nothing short of phenomenal. Microsoft reported earnings per share of $3.65, comfortably beating analyst estimates of $3.37, with revenue soaring to $76.4 billion, surpassing Wall Street's expectations. These stellar figures are primarily fueled by a relentless demand for its intelligent cloud services, particularly Azure, which saw an incredible 39% year-over-year growth at constant currency. This strong performance has pushed Azure's annual revenue past the $75 billion mark for the very first time. The company's strategic investments in AI infrastructure, driven by its partnership with OpenAI and the integration of AI into products like Microsoft 365 Copilot, are clearly paying massive dividends. Analysts are universally optimistic, with multiple firms like Oppenheimer, Wolfe Research, Barclays, and Morgan Stanley upgrading price targets, citing Microsoft's undeniable lead in AI. Perhaps the most striking market reaction is that Microsoft shares have surged, pushing its market capitalization past an astonishing $4 trillion, placing it alongside NVIDIA as one of only two companies globally to achieve this milestone. However, it's prudent to acknowledge potential challenges. We need to keep an eye on supply chain disruptions, cloud market saturation, intense competition, and looming regulatory scrutiny, especially from authorities like the UK's Competition and Markets Authority. Now, let's turn our attention to the charts and see how this explosive news has manifested in price action. Looking at the daily chart for Microsoft, we can observe the broader trend leading up to this earnings report. The stock had seen a period of consolidation and a slight pullback in late July, moving within a range typically around the $500 to $515 level. Notice the candle on July 30th, where the daily close stood at $513.24. This was the price immediately before the market was fully able to digest the full earnings report. But the real story unfolds when we narrow in on the 15-minute chart for July 30th, specifically from late afternoon into the after-hours session. This is where the direct impact of the earnings announcement becomes vividly clear. Observe the significant volume spike and the dramatic upward price movement that began sharply around 1952 Universal Time Coordinated. The stock, which was hovering around $510 to $512, exploded upwards, with the candle at 1952 Universal Time Coordinated on July 30th showing a staggering 6.28% jump in just 15 minutes. This single candle reflects the market's immediate and overwhelmingly positive reaction to the earnings beat and robust guidance. The price soared past previous resistance levels, reaching highs around $550 and continuing to climb in subsequent candles, demonstrating immense bullish momentum. This rapid surge confirms the news reports of the stock moving towards record highs in after-hours trading, effectively smashing through what was previously its 52-week high of $518.29. The sheer volume accompanying this move signifies strong institutional and retail buying interest, reinforcing the validity of this breakout. Returning to the daily chart, we can now appreciate the scale of this move in the broader context. The price has decisively broken out of its recent consolidation range. This surge effectively turns previous resistance levels, particularly around the $510 to $520 zone, into strong new support. For traders, this means that any significant pullback to these levels could be seen as a buying opportunity, assuming the fundamental narrative remains strong. The new key price level to watch immediately for short-term support would be around $540, representing the low of the initial earnings jump. Above this, the short-term resistance is currently at the new all-time highs reached in the after-hours trading, around $555 to $560. Breaking above this level would signal continued upward momentum, potentially targeting the higher analyst price targets ranging from $582 up to $675. The long-term trend for Microsoft remains strongly bullish, driven by its dominance in cloud computing and its aggressive, successful foray into AI. The massive capital expenditures, projected to hit $30 billion in the current quarter, indicate a strong commitment to scaling AI infrastructure, which is a significant long-term growth driver. However, it's prudent to consider potential bearish factors. Regulatory scrutiny, especially in the cloud services market, could pose a headwind, as could any signs of a slowdown in enterprise AI adoption or intensifying competition. A break below the newly established support at $540, or even further down to the $520 zone, would require a reassessment of the immediate bullish outlook. Such a reversal might be triggered by broader market weakness or specific negative news regarding Microsoft's AI or cloud segments. For short-term trades, watch for consolidation around these new highs and look for clear breakout patterns above $560 on strong volume. Long-term investors might consider dollar cost averaging on any dips towards the $520 to $540 support zones, banking on Microsoft's robust fundamentals and AI leadership. The likelihood of Microsoft reaching these higher price targets like $630 or $675 in the midterm, next 6 to 12 months, appears moderately high, perhaps 70 to 75%. Contingent on sustained Azure and AI growth and absent major regulatory hurdles. A condition that would reinforce this likelihood is if Microsoft continues to exceed guidance on Azure growth and demonstrates tangible monetization from its Copilot and AI services beyond current expectations. Conversely, a significant shift in Fed policy, a broader market correction in tech, or adverse regulatory decisions could dampen this outlook, making a move back towards the $500 region plausible, with a 20 to 25% likelihood in such scenarios. Things to look for include the next earnings reports for continued Azure and AI growth metrics, updates on capital expenditure trends, and any news regarding regulatory actions. That's all for today's in-depth analysis on Microsoft. Make sure to like this video, subscribe to explain the charts, and hit that notification bell so you don't miss our next market breakdown.